Hi, I'm Chris McLean from Stonechair Capital. Earlier, I had the opportunity to sit down with Robert Van Beers of RVB Capital and hear how 30 years of energy experience on 2 continents has led him to have a pipeline of projects that is the envy of developers. Let's dive into that discussion with Robert Van Beers and learn more about energy and Africa. Well, thanks for joining us today, and again, another edition of this podcast. And I'm really quite intrigued by the discussion that I'm about to have here with a individual that has all kinds of experiences in Africa and experiences in the energy sector on multiple continents. The gentleman's name here is Robert Van Beers. And Robert, please, if you could just tell us a little bit about yourself and your company.
Yeah, thanks very much, Chris, and thank you for inviting me to join you in this discussion. So, Chris, I think you've got it right. I've been involved in Africa now for about 40 odd years. I went over there as a young guy, finished my high school, and then got involved in rural development projects. Started an infrastructure fund that built clinics and classrooms and water supply systems and roads and bridges in rural communities in South Africa. And that fund is actually still working today, and it's been working in villages for, as I say, nearly 40 years now. And I've been in and out of Africa for most of the time, intervening, sometimes as an advisor. So I've worked on countless power projects as an economist and a finance advisor. And I ran a large engineering company across all of Africa, running their energy group from Cape Town to Cairo. And now a group of like-minded individuals and I have put together a company that's developing renewable energy projects in sub-Saharan Africa. So we have a number of projects on the go right now.
So your journey's definitely taken you, in one way, as I explain it to many people, across the spectrum of energy. What energy was 20 years ago is not what energy is today. And you're a living example of that change that's happening. When you were in the North American continent, you had experience with a public company, I believe. Talk me through that growth strategy and how you want to apply it perhaps to your future growth strategies.
That's actually kind of an interesting question, Chris. So yeah, I was one of the founders of a company called Tunbridge Power. I had been in the transmission business as an advisor for about a decade or so, and then with some partners started Tunbridge. And we, to make a long story short, we ultimately developed a 340-kilometer transmission line that connected Alberta to Montana. And it's, to my knowledge, still the world's only cross-border private transmission line done entirely with private capital and private initiative and private risk-taking. But it's a really interesting project, and it's the process of getting there, dealing with the regulatory issues and the technical issues and the financial issues and so forth, are remarkably similar to the challenges in Africa. Africa presents, of course, another layer of complexity in certain dimensions, but it's surprising when I look and compare and contrast the experience in North America with that in Africa, just how profound the political risk is in this country too, whether it expresses itself perhaps somewhat differently. There isn't a lot of NIMBYism to worry about in Africa, yeah. But there certainly is here. And it's really interesting. So project development remains an uncertain endeavor and a very difficult one consequently to finance.
The experience that you've had from in the life cycle of project development. I mean, we often hear in Africa about the need for, we'll call it local power and local power usage, and that how, say, DFIs need to be stepping up for transmission and helping governments deal with those kinds of issues. And here you are with experience in both of those camps, and you firmly understand that spectrum that has to happen with efficiency for energy to be used, by all the different constituents. Where do you see in the different areas that you're currently working, and we'll get into the project soon enough, where do you see the greatest strength? Is that in transmission or is that in generation?
So my personal experience is probably much stronger on the transmission side. I'm not an engineer, I'm an economist by training. But over the many years I've worked with transmission, I've really come to love the sector, because if you understand just how complex transmission really is, most people think it's an extension cord that connects a power plant in a load center like a city. It's in fact a far more subtle network. And it has to be kept synchronized, and it has to be kept in balance in real time, and it's interconnected with grids all across the continent. So it's a very challenging thing to manage a transmission grid properly. But if transmission doesn't operate properly, then consumers are forced to buy power from the plants that are near them. A country like Nigeria is a good example. The vast majority of the installed capacity in Nigeria is not grid connected. And so consequently, power is hugely more expensive than it should be, and much more environmentally destructive than it would otherwise be. So the transmission grid plays a very critical role in trying to help consumers get the most efficient and low price power, but also to achieve environmental objectives. So it's really important that grids be well managed. And one of the challenges is that they're very capital intensive, and any grid asset tends to last virtually in perpetuity, but they're not cheap to build. And as we all know, governments struggle to raise that kind of capital or to back that kind of capital with sovereign guarantees. So increasingly all around the world, whether it's in Canada or it's in Kenya or in South Africa or in Egypt, governments are having to lean on the private sector and come up with models within which the private sector can bring innovation and bring capital to transmission. And that's tricky, because it's been a sector that traditionally has been dominated exclusively by the government.
You now have chosen to go into the generation side with some of your projects. Talk me through your journey, to generation from where you were.
Well, Chris. So I would almost say that's a push factor, right? I mean, if there were great transmission opportunities for us, we'd probably be doing transmission projects. But there are very few regimes or very few countries and grid systems that are truly open to private investment at this moment. And the second reality is most of the projects that might be available are very large, and we're not a company with a large balance sheet. So that pushed us towards generation, where you can do a bite-sized project. We're doing a number of projects now, all of which will interconnect not at the transmission level, but within a distribution grid, which is again a little bit different. It's less technically complicated because you're interconnecting at a much lower voltage. It's more like connecting your driveway to a city street than connecting your driveway to a freeway. There are different models, and connecting to a high voltage transmission line is technically and financially challenging. So we're doing bite-sized projects, looking for projects that have a lot of social benefit and environmental benefit and are economically solid.
My understanding from our discussions is that you are definitely one of those individuals that has a deep pipeline of projects because of your experience on the continent, both continents, your experience in general, and your, we'll call it, need to mix it up, right? Nothing is static in your world, right? So as a result, you're not afraid to pick up the phone. You'll make the smile and dial. You'll get on the plane. You'll see people. You'll get into projects. Talk to me about how you as a project developer see your project flow. Where do you get access to different ideas?
Yeah, it ought to be a complicated, challenging thing to put together a pipeline of projects. And I'm very fortunate. In our case, it's not, but partly that's happenstance. It is the result of decades of working in Africa. So, for example, I've lived and worked extensively in West Africa, primarily in Ghana, but also in Liberia, as well as in Southern Africa, South Africa primarily, but also in Botswana and Namibia, in Zimbabwe. And the benefit of that, Chris, is that we have a network of friends and colleagues, whether they're in the utilities or banking, or they're lawyers, or they're in construction companies, or even, they're journalists or politicians or bureaucrats. There's a network of people who are interested in what we're trying to do. They may be tangential to what we do, but they're aware of us. And so we have the wonderful luxury of making the investment you just alluded to, where we get on a plane, we go somewhere, and we let 15, 20 people know, hey, we're coming, we'd love to see you again, we'd love to renew our friendship and our relationship, we'd like to talk about what we're looking for. And as a consequence, there is almost literally a line of people coming to talk to us to say, I've got a great project idea, can you guys work with us to get this, that, or the other done? So I was just recently in Harare. There's a line of people coming to us with tremendous projects. Zimbabwe is a very challenging country right now because of its government, for one thing, but also and the sanctions they face, but also the currency issues. So, getting access to foreign currency is very, very challenging in Zimbabwe. But there's a lineup of people with great project ideas, looking for someone who's going to bring a creative idea in terms of how they can get a project done, and who's prepared to work collaboratively and on a equalitarian basis with a local partner. And that's what we want to do. Our objective is, of course, to build good power plants and to do power plants that make economic sense and are financeable, etc. But just as much to achieve social ends, and that starts with leaving behind a partner who's much strengthened by the experience of working with us, who's quite capable of undertaking the next project without us. And if we want to do something together, terrific. But we've left behind a partner with much deeper experience and confidence and a much broader network of resources with which they can do, their second or third or fourth project.
That's a very powerful statement. The idea of a partner left behind that is stronger than when they called you, as it were. That's impact at its finest.
Well, Chris, you're probably a similar kind of guy. If in our walk through this life we don't leave those behind us better off, what are we doing, right? So I mean, it's just baked into how we look at things. We just ask ourselves, how can we find people of integrity, people of intelligence, people with energy and initiative? So we like them inherently, but they may not have any experience raising capital, or they may not have experience negotiating complicated engineering and procurement and construction contracts. Well, we have that experience, but let's do this jointly and let's bring them along. And I'm pleased to say that the local partners we have, I'd say almost without exception, have become good friends. And it's highly unlikely we would continue to do projects without them. We will bring them from the country where we first met them to the next and the next and the next, because we've developed such a trusting and friendly relationship. But in every case, we'll look for truly local partners with the objective of leaving them behind much stronger than we found them.
That same strategy is echoed in your team. Your team is spread across the continent as well, with different skill sets in different geographies. Illuminate that for us a bit.
Yeah, sure. So it somewhat reflects where we found projects and partners and our experience. So we operate out of a number of centers in Africa, and I don't want to give you the sense that we're a billion-dollar company with gleaming office towers everywhere. We're mostly operating out of people's homes. We do have a number of corporate locations, but we're operating right now out of Accra and we're operating out of Kampala. We expect soon to have an office in Malabo, that's Equatorial Guinea. We've got a permanent presence in Harare, one in Cape Town, and one in Port Louis, that's Mauritius. So we're incorporated in Mauritius, and that's we do our banking and our bookkeeping and so forth, and our corporate registration in Mauritius. But we operate out of a number of other centers, and so we try to attract people to us who are like-minded and have something to contribute, but we're pretty ambivalent as to where they're located. So we don't expect everybody to be, joining us in Johannesburg, for example.
You're not taking the top floor of the stock exchange tower in Johannesburg and saying this is ours, and from here we will reside over Africa.
Not yet, Chris.
Well, it's that spread of people, I think, represents the depth of your projects as well, to weave these two things together. One of the projects that you are most keen about is in Uganda. Yeah. Why don't you, if you wish, give us some insight into why a project in Uganda caught your attention and how you think you add value to that process?
Sure. Well, thanks for that sort of teeing up an opportunity for me to swing for the fences in advertising our project. But most of your listeners probably haven't been to Uganda personally, but they may have some impression of the country. Winston Churchill dubbed it the Pearl of Africa. Uganda is a spectacularly pretty country. It's not particularly large. It's located in East Africa on the north side of Lake Victoria. It's rolling and very, very green. Lots of rainfall. Densely populated because the soils are extremely fertile. It's a lovely country. One of the great challenges the country has is in managing its municipal waste. And so, like many African countries, there's a lot of waste that's simply not collected. It's lying about in the street. So if you travel through many Ugandan cities, there's a lot of squalor to observe. And the squalor isn't necessarily directly proportional to poverty, but it is directly proportional to an inability to regularly collect waste. Imagine what Calgary or Toronto would look like 6 months into a garbage strike.
Yeah.
So about 40% of the waste that's generated in Jinja, which is the city that we have our first project in, is actually collected by the city. The rest is blowing around, and it blows into the river, or it gets burned informally behind people's walls, that kind of thing. But the landfill is in the middle of the town. It was once on the edge of town, but town has grown, and they're just dumping. That's all they're doing. They're literally just adding to the mound every day. And we started talking to them about waste management and proposed a energy to waste or waste to energy, plant that is to incinerate the waste and create a little bit of power and a lot of steam. And we're very fortunate. There are industrial off-takers there that would like to use the steam because it's great energy for agricultural food processing, et cetera. And the power is useful too, because it's right in the heart of the grid in the industrial area of Uganda. So we're working on a roughly $30 million project to do a waste to energy project there. Very, very pleased about the environmental aspects of it. So it'll be cleaning up the dump, and it'll be reducing or eliminating all the runoff that's now going straight into the Nile, right at the source of the Nile, and providing good employment both to some of the scavengers who are in the dump right now. They'll be employed in waste sorting, but also in all kinds of spin-off industries dealing with recyclables, for example. There's value in aluminum, there's value in recovered metals, et cetera, that can all be recycled. So that'll be much better organized and much better paid for them.
Now, in looking at a site such as this or others, as you well expressed across Africa, that it's a problem that's not unique to this city, right? Yeah. You have an opportunity to perhaps go on from there, but from here, when you're starting the business, how do you evaluate the quality of the waste, the time of the waste. Like, what do you have to build a business around? There's a garbage pile, but that garbage pile does what for you for how long?
So when we first start looking at our project, we tend to look at it as bankers might. What is the potential revenue stream? How likely is that revenue stream? How secure is it? In what currency? Is there enough revenue that you could foresee coming out of this project to make a capital investment plausible?
Hmm.
And then if that is answered positively, you then unpack 100 other questions, Chris, and
Yeah.
I'm happy to discuss any of them, but they go into what's the quality of my local partner? What's the quality of the fuel stream, which is what you're talking about in the waste? What is the cost of the technology? What is the complexity of the technology? What is the permitting regime? What are the environmental implications? What will be the social acceptability? What will be the arrangements with the municipality? And it goes on and on and on.
Yeah.
It sounds at times a bit overwhelming, but quite literally, we put this all into a risk matrix, which is a simple Excel spreadsheet where we ask ourselves, what are the things we need to make this project successful, and what could be going wrong in any of those dimensions? How likely is it that they would go sideways on us? Or what could we do to avoid a negative outcome? What do we need to do proactively to get to a positive outcome? And that becomes one of the guiding documents as we move through the development with our partners, is to say, all right, the biggest risks are, 1, 2, 3, 4. So, for example, in the Ugandan story, we're not concerned that we won't be able to sell the power. We're very confident we will. We, have good discussions going on with the utility. That's going to come right. We're still a little bit further behind in terms of confirming the steam revenues, but all indications are that's coming together beautifully. But those things still become very core to our focus. We have a very good handle on our capital costs, our engineering, procurement, and construction contract, et cetera, et cetera. So the risk matrix becomes a very central tool for us.
That risk matrix, that ability to look past your current site and look at other opportunities would give you potentially the title of a platform company or a platform entity. LPs that may want to be looking at different types of investments could see you then as not a one-off, in that you've got other things that you could be doing. With as much detail as you wish to describe, what other sorts of things are in your pipeline? Top 5, we call it.
Chris, you're spot on, Chris, and it's one of the reasons that we would really like to attract investment in our, what we call our holdco, so the parent company. Most investors want to drill straight down into individual projects and make their investment at the special purpose vehicle SPV level. So that's project specific. But you're exactly right. We have a very deep projects pipeline. At the moment, I don't know the exact number, but it's roughly 110, 115 projects that are on our desk right now.
100.
Well, they're not all active.
Oh, okay. All right.
Clear,
Yeah.
right?
Okay.
But there's 115 things that have come to us recently that we are taking some degree of interest in, where we are in some degree of discussion. And then the pipeline narrows down sharply when you get to privity. Privity means that I've got some legal claim on the project, and the people who brought us the project cannot just suddenly wake up and take it to somebody else. So I've got some degree of control over this. So we have privity right now over about 7 or 8 projects. So you go from 110 to 7 or 8. And of the 7 or 8 projects we have privity to, there are 4, including the Ginger project, where we are actually investing capital at this moment, where we made trips, we're prepared to put some money out, and we've got the ball rolling. And then the others, they'll be a year or 2 behind, but they could be accelerated if we had deeper resources. And what we think is valuable from an investor standpoint is to understand that one of the key risk mitigants we use is that we drip feed projects. So we don't put $1 million down in one project and say, have a nice day, guys, and tell me if it works. We drip feed the project. And if the project suddenly goes sideways, we stop drip feeding them and we allocate our resources to another project. That's one of the key tools we use to manage investor risk. And that tool isn't available to us when investors want to put their money at the SPV level. And then you're into a situation where the commitment is only to one project and you can't reallocate the resources at all.
Now, are all of your projects? Are all of your projects in the waste to energy space, or you look at a variety of different energy?
No, they're not. They are all renewable energy projects. So we have a number of solar projects.
Okay.
We have a fair number of projects that have come to us that are what people typically think of as the very socially desirable renewable energy projects. So these are small solar electric schemes in villages. For the most part, Chris, we haven't been very active there because we just don't see enough scale to make them economic. These are projects that are really run on a shoestring. And just recently, we were involved in one in Rwanda, for example, where we were the preferred bidder, and we had 20 villages. But you add it all up, and it's less than a megawatt. And I just don't know how we can bring the management expertise of our company to a project that after 3 years or 4 years is going to develop 1 megawatt of capacity. I just don't see how that works for us. So most of our projects are utility scale, but they're certainly not all waste to energy. No, not at all. We have a number of small hydro schemes that we're very excited about. We think there's a tremendous potential both in greenfield, small runner river hydro, as well as brownfield. There's a lot of small hydro plants across Africa that need some investment, better turbines, maybe slightly higher head. There's a number of things that can be done to improve the productivity of an existing hydro plant. And we think there's huge potential there.
In your evaluation then across sub-Saharan Africa, do you have an area where you say, we see the most opportunity here for us, unique to your profile?
At the moment, I would say it would probably be East Africa. So Rwanda, Uganda, Kenya, looking very lively to us right now.
Okay.
We have some great partners that we like a lot in Equatorial Guinea. So we're excited about that. And, when I mention Equatorial Guinea, I'm sure many people have never heard of the place, or if they look it up, they'll go, wow, what a messy place. To us, the quality of the local partner matters so much that we're prepared to look at some very challenging countries. Zimbabwe would be another example, where with really good local partners, and we have some deep relationships in the banking community, the legal community, and the engineering community in Zimbabwe, where we really trust we could put together terrific projects. Where frankly nobody else could, and we're excited about those. We think they have real potential as investments, and we also think they have real social potential.
So, okay, let's talk about challenging jurisdictions and the different instruments that are available to you and to me for investing in those places. You go, okay, we could have insurance of some kind on the whether by DFIs or others. And then there's also the whole issue of currency risk. How do you feel about both of these scenarios and trying to manage your projects? Or is it even an issue for you?
Oh, it's definitely an issue. The underlying challenge is you're typically having to import the core technology, whether it's your generator or all the engineered goods are typically imported, and they're typically priced in US dollars. And then, of course, the local revenue stream, there's a big push to make those payable in local currency. And so you're very much exposed to two things. One, that the local currency will continue its long-term trend of weakening against hard currencies. And secondly, that a variety of rules can crop up that inhibit the exchange of the weaker, increasingly weak local currency for US dollars. So managing those two is very central to what we do in projects. And, we look for a variety of ways of doing it. In Zimbabwe, typically, you can develop projects quite successfully if you're doing them for an exporter, because you go straight to the Reserve Bank of Zimbabwe and you say, look, every month the client we're working with sends, let's say $50 million worth of stuff overseas. and they should notionally be required to bring that $50 million back into the country. But we want an agreement that they pay us first, and they pay us first in Hong Kong or Singapore or London or wherever they're banking, and we get paid in London in dollars or in pounds or whatever before the money goes back to Zimbabwe. And in order to make these energy investments possible, the Reserve Bank will approve those arrangements. So there are ways to do things, even in a really challenging country like Zimbabwe. You just have to roll up your sleeves, get stuck in, and work your way through complexity. You know, one of the things that many investors worry about is they have a perception that Africa is enormously corrupt. I guess I'd make a couple of tempering remarks. One is, I don't think Africa is actually uniquely corrupt. I think there are many parts of the world that suffer that problem. And secondly, we have been very successful to date in dealing with it. And it's not terribly complicated. One of the things we do is we bring it up early in a conversation with government officials and counterparties. And we just make it extremely clear this is not part of our business model. And what's really interesting is you can see the response almost instantaneously. Some people perk right up and go, "Oh, I'm glad that got cleared up and we don't have to worry about that." And other people get all discouraged because they were waiting for a big thumping payout. The useful thing there is at least you know right off who you could be wasting your time with and who wants to work with you. In a couple of instances where we've been sort of held hostage by people who are clearly looking for an illicit payoff, we've done all kinds of different things, but most recently, for example, we invited the Canadian Trade Commissioner Service to come to one of our meetings and just observe. They were invited to merely sit in the room. And we had a full discussion about, you know, the demands for payments with a Canadian government official who'd made the effort to travel by plane to sit in this meeting. And that cleared it up because we made it very clear. We will escalate to the state president. We will raise this issue. The Canadian government is sitting in our corner. Do we have an option to move forward here, or have we hit a roadblock? And we got through the roadblock. And we will continue to operate that way. And it's not because we want to be the Dudley Do-Rights who would never want to work with somebody who's looking for a payoff, but we actually believe that corruption undermines Africa fundamentally. It undermines anywhere fundamentally. And there's no point doing a project if you leave the community weaker and more disorganized and less accountable than you found it in the first place. So that's just not what we're here to do.
That's again a refreshing discussion that it's being had here on a public forum to say these are ways that we can deal with it. These are the things that can be dealt with, and let's deal with it. So it's very refreshing. Thank you for not shying away from the discussion, because many do. They often just say, we deal with it, don't worry about it. That kind of approach, right? And so
and one has to wonder sometimes, and if that means we have an agent who deals with that for us. Right? We just nudge, wink, wink. Yes, we pay people off, but we don't do it directly, so we have deniability. That to us just doesn't work. We would never want our local partner engaged in that kind of behavior. As I said at the outset, we want to leave them stronger and more capable. And secondly, we don't want governments to be taking illicit payments from our projects, because it never stops. It never stops. And they are if you're building an energy project, government is your long-term collaborator in one form or another for decades ahead. So you might as well have a trusting and straightforward and honest relationship, one that will withstand a change of government, for example. And the only way to do that is to be forthright and honest.
So you brought up an interesting starting point for the next discussion, is to say government is your long-term partner. So a lot of people, in my experiences, look at utilities in Africa as a short-term win. How many kilowatts, how many megawatts? Unless you're doing Inga or GERD dam type stuff, it's all about, I've gone from 1 to 10, 10 to 20. They're small numbers that ultimately mean smaller projects that in the next in line in discussion say have a very hard time attracting capital, because the minimum capital commitments for a lot of institutions and frankly DFIs is a lot bigger. And so it becomes in a long-term view, with projects that are smaller, with the volume of projects you have, what is your view for what utilities could be or need to be in Africa? Are they still state? Does a private need to come in? What's your view, long-term view for utilities, the energy utility?
Yeah, sure. So look, my own personal view is that there's an enormous synergy between private capital and state utilities, and that different countries should explore how to bring private capital into their own utilities, whether they're generation utilities, transmission companies, or distribution companies. I think there's a terrific benefit to bring the discipline, the technical innovation, the cost savings of scale, for example, of a private operator into a state-owned utility. But at the same time, those private operators understand fully that they're subject to regulation, and that regulation has to be aligned with the objectives of government policy. So, it's going to look different in a country like Ethiopia, where you're trying to develop GERD and you're trying to develop a network that will span multiple countries around you, and you're trying to do things on a huge scale, and you've got very low rates of electricity penetration. Or countries like Uganda, where you've got lots of generation capacity relative to today's load, but you've got a settlement pattern that doesn't allow for any density. I mean, Uganda's soil is so fertile that everybody lives everywhere. So there almost are no towns. I'm exaggerating slightly, but the countryside is covered in people living on very small plots of land and making a decent living, growing things on very small plots. So the density just isn't there. So distribution is a challenge. So if you're part of an investor in a utility in Uganda, you've got to play into that agenda somehow. You got to help the government figure out, how do we electrify Uganda so that the settlement pattern of today doesn't become a hindrance to the economic participation of everybody tomorrow. I mean, in a country like that, how do you get the internet to everybody? How do you improve education outcomes in rural areas when people live in such a dispersed pattern? That's in part something the utilities have to struggle with. What kind of technology is that? What kind of pricing model is that? How fast can that be achieved? What kind of generation do we want? Do we want small dispersed plants or large central ones? I mean, those are planning and policy issues. But I think there's much that private investors can bring to those scenarios.
And so, from your company's objectives and on a near term and ultimately a long term, where do you ideally want to position yourself? If you said, I have a crystal ball, in 5 years I'm this, in 10 years I'm that, what maybe even 20 after that, what do you see that progression looking like?
Look, so at the moment we can do 2 or 3 projects simultaneously, and that's stretching our resources. We would like to be capitalized so that we can bring roughly 2 new projects into the hopper every year. The typical project development is 3 years, 4 years, that kind of thing. So that at any one moment, the company would probably be dealing with 5 or 6 projects, and that we're 5 years out, we are starting to mature projects that are going into construction, that are going into commercial operations. And at that point, we would seek to recycle our capital, meaning we'll sell the project to long-term investors who want de-risked assets and a steady cash stream. And we'll say, fantastic, take this asset off our hands. And the premium we've collected for making that possible for them would be recycled back into projects development elsewhere. So an optimal group for us would probably be exactly like I said, bringing roughly 2 projects on every year, with projects typically taking 3 to 5 years to be fully developed. So you've got 5 or 6 projects under development at any one time. You probably need a team of around 20 people to do that. And you need a few $1 million in the tank to keep that running for 5 years before you see your first exit. Now, I think if we demonstrate after 2-3 years that we are very successful at this, and we've been delivering that already without the resources, I think investors would look at us and say, hey, you're doing 5 or 6 projects, but you're doing it on a continent of over 1 billion people with huge needs. Could you do 3, 4, 5, 10 times more. And at some point, there's a quantum leap there in terms of becoming far more structured and corporate and so forth. But that really is a question of resources. I think we have the approach. I think we have a lot of the key leadership. I think we have the values. I think we have the local relationships, so we could scale this up.
Do you see others that are at that point yet?
You know, this is such a difficult sector, right? Yes, there are a couple of others. There's some wonderful developers around Africa. Most of them are bootstrapping it. They've typically had 1 or 2 projects that they've seen over the hurdles, and they're replicating that with projects 2, 3, 4. You would think that the DFIs would be doing all they can to help those developers. But you know, over the past 4 years, I've grown increasingly cynical. It's a difficult sector to deal with. They're really not focused on how to make small private sector developers successful. They're really very interested in making announcements about program targets, and dealing with large corporate entities. When we are approached by DFIs, and honestly, Chris, I've dealt with, I don't know, maybe 15 or 20 over the last 4 years. We typically ask early, so could you maybe give us a reference of someone you financed in the past that we could talk to, so we understand how this journey will feel for us? And usually you get crickets. You know, there's like, there are not a lot of developers in our area, even in agriculture or transportation or water supply or whatever. I'm not saying they have to be energy people, who the DFIs can point to and say, hey, we got those people started.
Interesting. Because again, it comes to that whole problem of smaller developers, and the majority of the projects right now are smaller projects. There isn't the capital flowing to GERD dams and Inga dams in that type of volume to your sector. It's just not happening when that's the majority of the projects.
That's where the need is too, right? I mean, the South Africans have done a terrific job with their renewable energy IPP program. You know, getting the cost of solar and wind power way down. In fact, people are bidding now in that program at below the cost of supplying. And that, you'd think that makes no sense, but they're betting that the cost of solar panels will continue to come down. And if that bet is wrong, they don't have a margin in the project. So it's really interesting. But that's a kind of game that can only be played by very large players with big balance sheets who are prepared to take, you know, $500 million risks. That does not describe people like us, right, who are bootstrapping our way across the continent with a different set of objectives. We're never going to seek to be doing billion-dollar projects. Let the big players of the world, the big utilities and the big energy companies of the world, let them have those projects. What we think is really missing is that middle piece that takes entrepreneurial, innovative, energetic Africans with good ideas and gives them a platform from which they can make projects happen that have effect in their own communities.
I think that last statement is, can we frame that? You know, I'm going to take, you know, put a quote at the beginning of that, quote at the end of it, and, you know, send it to you and everybody else who wants to be involved in this space, because that is a great summary, right? It's about Africans being responsible for their own growth and us being partners in that growth with them. That's And I know there's. Go ahead.
If many of your listeners don't know Africa, they should do something like go do a safari in Kenya and go to one of the conservancies. And these are privately run safari parks that are adjacent to the Mara, the Serengeti Park, and they have no fence between them. So you're on a private land. The same animals that are roaming the vast big park walk in and out of this private area, but on the private area is run by the locals only. And the pride and the excitement of everyone you meet there, that you have come from Canada or US or Europe or wherever you come from, and you've come to visit their village and their area, And they are so proud of it. And that's precisely the pride we feel it's palpable in our projects. People, drag us to their villages to say, if you come to my village, I'll show you that there's a river there that needs a dam and a power plant, or I'll show you a waste landfill site that would benefit so much from using that fuel to generate some power and steam. And the commitment of the local people to making a difference in their own communities is just, it's priceless. You can't buy that. That's an amazing resource.
Absolutely. Ingenuity and human drive, will make anything happen. And somehow you have traveled between continents, have had your foot in the energy sector in its rainbow of colors over 40 years, and continue to move forward. And there is a fabulous, we'll call it, the sense of a passing of baton that you have, that you want to create out of this, call it, next stage in your journey, to say, look what Africa has given me. How can I give back, and how can I empower you to move forward? It's most encouraging.
Yeah. Well, thank you. It just, a lot of people will tell you, if you work in Africa, it's not always easy, but Africa gets in your blood. And after a while, you become passionate about it. You go, I could make a difference here. My life could have meaning if I do these things. And we do them commercially, not so much because we're greedy and hope to get fabulously wealthy, but because the logic of commercial business is so compelling and gives you such a clear metric against which to make your decisions, that without it, I don't know how we operate. So we make decisions that are commercially sound, but we make them because we believe that they're actually going to improve the world around us.
Robert, I want to give you the final word here, and a chance to say what it is that is important to you about right now. What is important to your growth and your company and your future? What is it about right now that you want to close us off with?
Well, thanks, Chris. I guess, you and I have discussed this a few times before. Our greatest screaming need is for an investor who has the confidence in us and the alignment of vision to give us the resources to make this happen. On the bootstring approach we're at now, this could take decades to get to results. And frankly, Africa doesn't need to wait decades. We need a few $1,000,000 to make this happen. And in a world awash in capital at low to even negative interest rates, you would think that where the social and an environmental need is so great, you could find some resources. But it hasn't proven that's the case. For a variety of institutional reasons, the capital just isn't there for project development in Africa. It just isn't there. So our greatest need, far and away, is to have an investor who says, you know what, I think if we put 10 or 20 million bucks in this company, that a decade from now, we would look back and go, wow, that's done extremely well. That company is now worth multiples of what we put in it. And it's achieved its project results. It's de-risked itself. There's no longer the risky company that it was when we put the money in, but it's also worth a lot more. And I'm supremely confident we can achieve that. The difficulty is finding an investor who's got money earmarked to do something like this.
Well, Robert, thank you for opening up in the way that you have today. I think you've been very forthright in a lot of your views of doing business in Africa and your successes and failures in Africa. And so I've benefited greatly from this discussion, more than, it's added to some of the things that we've talked about many times in the past. And I've gotten more out of it, and hopefully others have as well. So thank you. And I look forward to chatting with you again soon. We'll make sure that in the show notes, all of your website contact details, social media, and your details are available so that people can reach out to you. And, hopefully we can make things better in Africa, just by somebody listening today. So we'll go from there.
Well, Chris, thank you very much for the opportunity. I'm touched that you'd make it available to us. and very excited for what you're trying to do as well. I think you're a very key part of this picture. So thank you very much.
Thank you. Thanks for listening to Energy and Africa. I'm your host, Chris McLean. If you like what you just heard, we hope you'll pass along our web address, stonechaircapital.com, to your friends and colleagues. And please, leave us a positive review on all your social platforms. Be sure to check out our archive section on our website for previous podcasts and videos. Check us out on Twitter and LinkedIn. Details are all on the show notes. Join us next time for another edition of Energy and Africa.